Morning everyone, welcome to an episode of the Mizuho Week Ahead. I'm Boon Hing, market economist at Mizuho Bank. This week's theme, deals galore amid policy concerns. Last week began with countries in ASEAN securing trade deals, Malaysia, Cambodia, and establishing trade frameworks, Vietnam, Thailand, with the US at the ASEAN Summit in Malaysia. This culminated in the US-China trade deal alongside Korea-US trade deal during the APEC Summit in Korea. Amid the details over soybeans, pot peas, tariff rates, the reminder really should be that trade barriers are still far higher than they were a year ago, even as we enjoy the relief that a sharp deterioration in China-US relations is averted. Meanwhile, the Fed proceeded with their 25 basis point cut, and it was accompanied by the termination of quantitative tightening. This represents insurance against front-end liquidity shocks. Nonetheless, the Fed remains tentative on further easing given heightened uncertainties. A potential problem, though, is that lax data may trigger behind-the-curve concerns. Across the Atlantic, the ECB last week kept rates unchanged, while the BOJ in Asia, their rate hold was accompanied by an abundance of caution around rate hikes, as Governor Ueda alludes to the need for further data. In Asia, Taiwan's Q3 GDP outperformance at 7.6% year-on-year reminds us that beyond trade obstacles, the semiconductor cycle continues to support growth around Asia. On that note, considering the strong growth outturns in Malaysia, the Bank Negara Malaysia is likely to keep rates on hold on the 6th of November as external demand remains resilient and domestic sectors such as construction remains buoyant on the back of FDI investments into data centers alongside several real estate developments. In Indonesia, Q3 growth is also likely to hold up at around 5.1% despite the political turmoil, as various indicators from trade to retail sales show a marginal uptick. This, though, is no panacea for the rupiah, with fiscal doubts creeping in at the margin. Allowing local governments to borrow from the central government is also creating worries about the extent of fiscal stresses at the local level in Indonesia. Meanwhile, in the Philippines, we expect Q3 GDP to soften to 5.2% year-on-year from Q2's 5.5%, but avert a sharp slowdown from the corruption scandal. Admittedly, soft spots in tourism and private consumption remains in abundance, while external demand from the semiconductor upcycle is also supportive. This print may affirm the need for further easing, but the BSP will remain watchful of peso weakness. Down under in Australia, the RBA will be set to hold rates on the 4th of November as rising inflation puts them in a tough spot. While Q3's inflation spike has largely been due to the expiry of electricity rebates, it is also these rebates which aided inflation's return to within the target range and enabled them to cut rates earlier. Consequently, we remain watchful of labour market weakness to potentially outweigh an extremely bumpy inflation path. All in, trade deal optimism may turn more differential across Asia as China narrows their relative gap with the rest of Asia, while India rules the lack of a potential deal. For more information, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.